The new reality of Vancouver's housing market in 2025 will change investing into real estate forever. Landlords used to believe that investing into Vancouver's real estate was a fairly safe choice. Rents kept going up, and eventually your tenant would pay off your mortgage. On top of that, if you ever needed to get out of your unit, you were able to sell it, usually for a profit. However, in recent months, we have seen report after report of struggling landlords, falling rental rates, and higher mortgage payments. So what's going on, and how will this affect Vancouver's real estate market moving forward? When the market was very active, from my experience, we had a lot of mom and pop type of investors trying to get into their first rental property. When I say mom and pop type investors, I'm just talking about investors who have 1 or 2 rental properties, not seasoned investors with multiple units, sometimes even apartment buildings. With new landlords in Vancouver, it was very common for them to be at the break-even point or even sometimes be in a slight negative. I'm talking about $200 to $300 minus every month. The hope was that eventually rents would go up. On top of that, you would make your money back when you eventually sell the investment and you get all that appreciation. With fairly low mortgage rates and high rents, this was a risky strategy, but it was sort of a calculated risk because you knew eventually you will start breaking even and then you will be making more and more money as the time goes on. However, of course, this is also a very risky strategy because when you're at the break-even point, you are much more vulnerable to any market instability. And that's exactly what happened to a lot of novice investors. Unfortunately, a lot of them started being in red more and more every month as the rental rates started to drop, not just in Vancouver, but across Canada. In fact, the latest report is a rental drop of 3.3% year over year in the whole Canada. And that is even higher for Vancouver. We're talking about almost 5% rental drop for a 1-bedroom apartment and almost 7.5% drop for a 2-bedroom apartment. So what's causing such a sharp decline in rental rates and what can we expect moving forward? Well, there are several reasons for the recent rental drops. Number one, the lack of international students. If you look at 2022, Canada has welcomed 551,000 international students. This was a record-breaking year. Then for 2024 and 2025, the number was reduced to 437,000. However, this number I think is even worse because the way Canada started looking at international students numbers, they started accounting for renewal of international students as well as newcomers to Canada. If you look at this article from immigrationnewscanada.ca, we can see that Canada welcomed only 163,000 new international students in 2025, which is about 56% drop of year over year. That's a very significant drop. It's a much harder drop than what is officially reported by the government of Canada because now they're just starting to calculate the total number of international students differently. On top of that, the population of Canada has stayed pretty much flat in 2025 because of recent caps on new immigrants to Canada. The number of permanent residents issued has dropped significantly, and just Canada started being a lot more picky with the number of new visas that they issue, which means that we have a lot less demand for new rental units, and that was one of the major factors fueling the rental market. Newcomers that need housing. Nowadays, the newcomers numbers have sort of flattened out, which helps with the cooling of the rental market. But there are several other reasons that are also happening in the background. Another reason are higher mortgage rates. Yes, the mortgage rates did come down since their highs of 4.5% overnight lending rate to now about 2.75%. However, they're still much higher than what a lot of landlords were used to when they were buying these apartments. So on top of having less demand for the units, you also have higher mortgage payments. And again, if you're a small landlord, you're just losing a lot of money all of a sudden. But on top of higher mortgage payments, we have also experienced higher maintenance fees. There were several reasons for that. Number one, higher insurance costs. We tend to forget, but about 4 or 5 years ago, a lot of high-rise buildings in Vancouver found themselves in a situation of much higher water damage deductibles. Some buildings had their water damage deductibles doubled, tripled. Some buildings were not even able to get their insurance in time, which means that their premiums have gone up significantly, which led to higher maintenance fees. But besides that, because of the pandemic as well as the recent trade war, we can see much higher repair costs. If you talk to anyone in the construction industry, they will tell you the rise in the material as well as the labor costs right now. So if you have to, let's say, replace a roof in 2025, it is much more expensive than it was even a couple of years ago, which means that your special levy fees have gone up as well as your standard maintenance fees. In fact, I myself am kind of surprised of how sharply the maintenance fees have gone up in some of these high rises, especially in downtown Vancouver. So to sum it up, we have less demand for rental units and we have higher expenses for landlords because of higher mortgage payments as well as higher maintenance fees. But that's not where the bad news stops. Unfortunately, for a lot of landlords, there is more bad news. They're facing more competition nowadays from several different angles. Number one, the ban on Airbnb rentals, which means that a lot of landlords that were previously focused on short-term rentals, that were competing with hotels, are now focusing on long-term rentals and competing with other long-term rental landlords. More supply to the market, which means lower prices. On top of that, we have a lot of developers focusing on rentals, and even more so, we have a lot of developers switching their for sale condo type developments into rental developments because of a slowdown in the pre-sale condo market. And government played a key role in this. There were a lot of incentives for developers to focus on rental type buildings. In some cases, if you wanted to build a big development, you also had to include a rental portion in that development. And all of this was happening in the background for several years. But now in 2025 and 2026, a lot of these buildings are getting completed and coming to the market for rent. In fact, one of the largest ones, the Signal, just started renting out 2 of their towers. In total, they have 500 units. And of course, all of these units have to be rented out. So they are very aggressive, especially because they know there's another project that's coming to the market very soon. This one's going to be even larger. It's in the Kitsilano area and it's by an indigenous developer called Sinok. This development will offer 1,600 units that will come to the market later this year and early next year. And of course, Signal wants to rent out all of their units before this project comes online, because the last thing they want to do is compete with each other. All of that is to say that the developers are becoming a lot more aggressive in attracting new tenants, which means that there is a lot more competition for the smaller landlords. So to sum it all up, for some of the new landlords, there is a lot of headache from various angles. Number one, you have a lot less demand because of the cap on international students as well as permanent residents. Number two, you have higher costs with the mortgage as well as the maintenance costs. Number three, you have more competition coming from the Airbnb angle. The former short-term landlords are now becoming long-term landlords. On top of that, you have more competition from large corporations that are bringing their big projects online. And lastly, you have falling real estate prices. All of this would not be such a huge deal if the real estate prices kept going up. Sort of short-term pain for long-term gain. However, right now, especially smaller one-bedroom investment type condos have been going down in price, which means that even if landlords wanted to sell their units, a lot of times they would be underwater, especially after all the taxes and the real estate fees, etc., etc. Which means that they're kind of stuck. They have to keep on adding money every month just to stay afloat. And on top of that, they don't know when the real estate prices will return back to the top. For the nearby future, a lot of experts agree we will see more and more inventory coming to the market, which means we will see lower and lower rental rates. This is going to continue for the nearby future. And in fact, we have seen already 18 months of consecutive rental drops. Yes, Vancouver is still the most expensive city in Canada to rent. However, the rental rates keep going down. And for the foreseeable future, that will continue. Unfortunately, that will have several effects on the market that are not so positive. Number one, as I say in a lot of these videos, developers keep on canceling or postponing a lot of their projects, which means that we might see a shortage in the new housing coming in 2028, 2029, 2030. That includes rental market as well, because right now we have all this inventory coming to the market, but there will be a pause because a lot of developers are considering postponing their projects. And number two, unfortunately, it became a lot harder for newer investors to get into the market. A lot of seasoned investors are still making a lot of money. A lot of them are actually right now buying up some of these properties at a lower cost because they have enough of the cushion built in. At the beginning of this video, I mentioned that I was talking about smaller investors. They're the ones who are really losing out, the ones that were sort of at the break-even point, the ones who put down 50-60% deposits, down payments when they have originally purchased their properties, or when they purchased their properties, the properties were worth a lot less. At the moment, they're doing just fine. They're not really struggling all that much, which means that they have enough cash to buy up more properties. In other words, the rich get richer, and for people to try to get into the rental market, it just became a lot harder. And the third outcome that I found out of the situation is that a lot of investor landlords are now switching to detached houses and duplex type properties as opposed to investing into condos. And again, this has to do with being a seasoned investor and having enough funds. Generally speaking, the detached housing market is a little bit more resilient than condos, and the belief is that in the future we will see a shortage of detached housing lots, so a lot of investors are sort of investing with that perspective in mind. Whether that bet pays off or not, time will tell. I'll try to keep you updated on this YouTube channel about anything that's happening in Vancouver's real estate. Please subscribe to the channel so you don't miss those videos when they do come out. If you enjoyed this video, give it a thumbs up, and if you're looking to buy some real estate here in Greater Vancouver, you don't know where to start, I have an absolutely free buyer's guide in the description below. And if you're a seasoned buyer, or if you're considering selling your property in Greater Vancouver, or if you just need some real estate advice, feel free to contact me. My information will be in the description below. The best thing would be probably shoot me an email and I'll try to respond as soon as possible. Thanks for watching this video all the way until the end, and we'll see you next time. Bye.